Hi and welcome to a weekly outlook. This is Kim speaking on Monday the 23rd of April. So here's your weekly lashings of data that's due out this week, including some economic stuff and of course looking at the sentiment and speakers, so and of course retail sentiment in amongst that, and of course the technicals. Starting off then, I'm going to bring in the fundamentals, have a quick flick through this. Particularly interesting this morning. Okay, the data's already out, but it's showing us a bit of a, sorry, I'm just going to make this a bit bigger. Important numbers coming out. So we've had the flash German and French manufacturing data coming out, and looking at the data as a whole, and I'm looking at Europe as a whole here. And in fact, I'm just going to click on the chart and you can see what's happening here, and this is a bit of a concern to some, is we well may have peaked in December, November, December there, and on manufacturing, and it seems to be having a little bit of rollover now. The US Germany's figures were still positive this morning. Oops, at 58%, so it's still positive. But overall, it does look like Europe as a whole may have peaked a little bit here, and that is a concern to quite a few. So that's where we are with that. Anyway, well that's out, and we'll see how that affects us going on. At the moment, it's put a bearish hint onto the euro. Aside of that, then looking through the week, we haven't got very little in the rest of today coming out here. Existing home sales this afternoon, which is very weak numbers, and then the Bank of Canada governor speaking at 8:30 p.m., which most of us won't be trading during that period, but he is due to speak in front of the House of Commons there, Standing Committee on Finance, so more volatility may be expected at 8:30 UK time on the Bank of Canadian, or on the Canadian dollar, should I say. Moving through to tomorrow, and looking at Australian inflation data coming out early, that can give us quite a kicker. That's at 2:30 a.m. So expect for some movement around about that. Aside of that, it becomes then a more quieter day. Again, we've got public net sector net borrowing. Could get a little bit of volatility, but I'm not expecting much at all for the rest of the day. Germany IFO business climate likewise can give a bit of volatility of 8 to 10 pips often, and then nothing much happens, so not interested in that. Running into Wednesday, and it's a bank holiday across Australia, New Zealand, and some European countries. Well, Italy certainly there, as it's Aztec Day, so that will be marginally quieter, but it shouldn't have a significant effect on our normal London trading. But there's little else there, and again we've got the Bank of Canada governor speaking later on in the evening, but looks like a relatively quiet day, all before the storm brews on Thursday, when we've got the minimum bid rate coming out for Europe, which is expected to be 0 but it's what comes in any statement there, but more importantly what Draghi manages to say at 1:30. Remember last time he was suggesting his concerns about inflation, and it's still relatively low, so he may just sort of continue in that sort of world. He was worried about protectionism, trade wars, etc. Well, that seems to have slowed a little bit, not a lot. And what else was it? Oh, the strength of the euro, so he was mentioning. So again, we'll see how that all comes out this time, and whether the overall key priorities or key focus is the same. Later, well, say later, but at the same sort of time, we've got core durable goods orders. That can be quite a volatile moment. So at 1:30 itself, before he even sits down, we'll probably get a bit of volatility in the euro dollar, pound dollar maybe. And then, as I say, Draghi will speak, and we'll probably get quite a bit of volatility around that speech, I would imagine. That's pretty much it. Then running into Friday, we've got the Bank of Japan data coming out early morning, normally all over and done with by about 7 o'clock, so that information all coming through the sort of late Asian session time normally towards. So they never give us a dead time, do they? Tentative. And then that's pretty much it through the Asian session there, leading through the day. Prelim GDP. Now these are two important figures coming out at 9:30 on 30. The UK GDP first crunch the numbers at 9:30, and same for the US, first GDP number coming out there at 1:30. So there will be elements of employment cost indexes and things looking at, but it's still the main headline figures for those two reports. And then we've got Carney speaking at 3 p.m. there. We've also got Carney speaking right on Tuesday. We've got Trump due to do a joint news conference with President Macron at what time is that? 16:45 on Tuesday. So it's late after evening, or early evening, should I say? And at 9 o'clock, the UK Bank of England Governor Mark Carney is to do a speech at annual dinner of London Society of Professional Economists. So that'll be a gripping dinner, I'm sure. But he may let things slip and continue in this dovish mode that's seen the pound roll over somewhat. So that's the situation from a fundamental point of view. We may as well then, I think, instead of going straight into, we can look at the sentiment, and let's do the technicals first just to break things up a little bit. Let's go through these technicals of the euro and then look at the sentiment of the euro. So technicals, this is a weekly chart. It is dipping down a little bit here. It's heading down towards that weekly 21, it would appear at the moment. We're short at the moment in the trading room. It's probably not too far off coming down to one of our targets. So, but the weekly 21 may just draw price down to it. However, as I've been saying for a long time, we tend to see the euro cradling its or coming back to its monthly pivot every few days. So if it does pull away today, be prepared for it to pull back towards that area where the weekly pivot sits as well, so around about that level. So it may just be a double draw there. Of course, with the data coming out later in the week, well, it may continue in this consolidation phase. What I'd like to see from here, well, we had a bit of a pivot swing leading into Friday's close. Today we've triggered that, it's running south, but we've got all these points of horizontal support, which looking at at the moment, looking at this near term first, and then moving on, we could be running eventually down towards that monthly S1. So it has some potential to roll over further. So let's have a look at what the sentiment is like for it. I'm just going to go from a dealer perspective now. Generally, the more selling it's coming on here is obviously they take in the dealers are taking the other sides of these trades, so the more bullish the market's becoming. Well, it's pretty flat looking across these two numbers. It's should give me the net figures here. Net positions not too different to one another there from the dealer's point of view. Okay, so looking at the different players within the market a little bit, the pension funds, the fund managers here gone a little bit more bullish on the euro dollar at the moment. Bearing in mind this was last Tuesday, when things were looking probably a little bit better than they are at the moment, as has the more speculative funds are pushing there up through a little bit more bullish, needless to say. The retail side is a little bit more bullish there at the moment as well. I did also look at the retail sentiment on the euro here. Let me just click this off, click that button off there, and it's pretty neutral on these figures from Oanda at the moment in terms of longs and shorts on the euro, so not really giving us too much information either way, but say technically it does look a bit bearish. Right, okay, pound, we may see those change, although the, as I say, institutional bigger money is still relatively bullish. The pound then, the pound is taking a softer note. It started last week, we got into some nice shorts on the pound last week. It went further than I expected in the end, and well, I say further than it went to where I thought it might go. It's typical, isn't it? And you're not necessarily always trading it to where you think it might go. You might only be trading it to the point of that particular day, particularly as an intraday trader. So the pound, just breaking down some key levels here, looking to break the bottom of the bands here, looking again towards that weekly 21. So similar-ish picture there, bearish engulfing candle there on the weeklies, looks pretty bearish. The sentiment from Bank of England Governor Carney, or Carnage as he should be known now, as you see the pound being ripped up a little bit, was a bit dovish. And of course we got sort of some sentiment coming through from the Brexit talks, which is also not particularly great at the moment. So with all that in mind, it's probably no great shock to see the pound selling off a little bit here. What's the outlook for it? Well, it's coming right across to this trend line at the moment. This is a near-term trend line. I've drawn a sort of the bigger trend line on here, running right away from the lows, from the earlier lows in early 2017, there, March 2017. So it could be heading down towards that sort of zone. As I say, from a daily perspective, we're right bang on a near-term support area here. We're just sort of running bang into it at the moment. So from here, what next? Well, we could just continue to roll over. What's the sentiment saying? Retail sentiment on the pound look is pretty neutrally balanced. Let's have a look at the commitment of traders report. If I can only get there, that'd be good. There's something in my way. There we go. That's better. Let's have a look at what the sentiment is from on the pound here. So looking at the pound here, and again, there was this sort of, bearing in mind this is a date on Tuesday, there was a sort of that's the retail traders getting all bullish on it. Let's have a look at what's happening elsewhere. Okay, there's a sign from the dealers here that there was an overall bullish feel. Asset managers bearish. Leveraged. Quite an upstep in bullishness there, so it's not unusual for them to get wrong in terms of the timing of these crossovers. And as I said, this was Tuesday, and a lot has happened since that point on the pound here. So maybe we'll see a continuation to the downside here in this change as we look at it next week. But at the moment, the sentiment was pretty bullish for the pound here on the different major traders here, the leveraged funds. So that's the pound pretty much, right? Let's run in and have a look at the dollar yen. Dollar yen, let's have a look from a weekly picture first, and it's continued pushing up. And this morning it looks like actually on this new week it's almost into that weekly 21 as I'm speaking here. It's not far away from it. There's also a level of support stroke resistance that we've support more so that we've come across lately there. So there was a key number, that was a key options number around that level as well previously. So sitting just running into that point now on the weeklies. What's the dailies looking like? Well, it had, and I readjusted it, had broken my trend here to the downside after the divergence we saw late the week before. That did run off for a couple of days, but that's all over and it's back on the more bullish state. So at the moment it's the yen certainly looks like it's selling off against the US dollar effectively. And sentiment wise around the yen, let's have a look. And now this, bear in mind, this is the other way around to normal, so it's looking at the strength of the yen, and we've got buyers here, which is generally suggesting on the leverage side. Let's have a look at the dealer side first, and it's a bit of a mixed old picture here because it's still got the sell side, but it's this sell side on the yen which would generally expect the yen to be from these dealer, because these are the other side of the market, would expect to generally see more of a bullish aspect when these are selling off. But let's have a look at the asset managers. Getting more long side here on the yen itself, so they're a bit more bullish on the yen, which is quite interesting. And the leverage, but don't forget they may just be hedging positions on some of these trades here. And this is a bit more neutral with long side coming off, and it's turning very much more towards the shorter side on the leverage funds. So the typical hedge funds, etc., are looking at it and expecting maybe some more upside there. Okay, let's have a look at the Aussie dollar. Now, to me, this is a sell point, a sell currency really. When you look at what's happening, and I'll show you why. So the weekly picture, it's just on my support level. This is declining. This was from the tops here. It's just sitting on there at the moment. This current week, last week it pitched back into its upper bands there, 21, sold off, couldn't hold on to anything, and is rolling. It put in a pivot swing. It's on the dailies there, it's rolling off from there. And then why do I think it might be on the sell side here? Let's just bring in and we'll start looking at the retail sentiment of the Aussie dollar look. And it's the retail traders are very bullish on it, according to Amanda at the moment. It was around about 73%. Now, with them being so bullish, it does make me wonder what's going on there then. Perhaps they think it's going to rally all of a sudden, but it does look weak. And let's have a look at the sentiment of traders on the Aussie dollar. Where are you, Aussie dollar? There we are. A is for Aussie. Right. And so start off with looking at the overall net sort of position. So so more longs mean more shorts. So a short, look at this in the inversion. So that's the more bigger traders are getting shorter on it effectively, as you see in the reverse here. And there we go, slight drop off on some traders here last week there. Remember, quite a bit's happened since then, and it's really rolled off and put the pivot swing in. And all the bullish side from the hedge funds coming off there. So possible change running through here. The non-reportables, the retail here, well, it's a bit balanced as well, actually more flat. But as I said, with some of the brokers out there, the forex brokers on the spot prices, that's quite a bullish play from the retail side, which suggests we could see some more downside. Okay, that's the Aussie dollar, and finally the Canadian dollar. Let's have a look on a weekly picture first. Now, a bullish sort of candle, not quite a bullish reversal or anything, but quite a solid up bar last week. Data wasn't as good as expected, and it's left a bit of a soft tone. And I'm going to come into oil in a short while, but oil could soften a little bit maybe. But looking as we push up here, running in towards the weekly 8 here, may just provide a bit of resistance if we can kick into there. From a daily perspective, we broke this trend that's been running down here quite strongly on Friday, follow through today. So it all started what was that, Monday, Tuesday, so Wednesday sort of time, Wednesday, Thursday, Friday, yep, and it's sort of pushing up and looking like it could still run up towards its monthly pivot at this rate. So a more bullish view on the US dollar stroke Canadian dollar technically at the moment. Sentiment wise, let's have a look at that. Let's just have a look at that from the, again, this is the opposite way around, so it's Canadian dollar stroke US dollar as opposed to the market, which rolls the other way. Let's just look at the retail sentiment on the Canadian dollar. Well, that's neutral, so that's not really showing us anything from the spot traders. So let's have a look through here. Dealer wise, well, dealers have been taking the bullish side, so it suggests the bearish side of the market. On the Canadian dollar, let's just look through asset managers. So they've been looking, and they're dropping slightly last week in terms of their longer positions on the CAD itself. And it's interesting, the hedge funds are completely opposite to this, and they're bearish CAD, and so they're very different holding position there. So they're still bearish on the Canadian dollar. So bearish on the Canadian dollar means the US dollar is going to be more likely to be pushing up there, which looks technically right. Now I'm going to just look at a couple of other markets. I'm going to just look at oil briefly here and take a weekly view of this first. And yep, it looks like it could be charging upwards, of course, towards that $73. And the Saudis said last week they didn't mind if oil went up to $100. I'm sure they don't. Trump, however, tweeted on Friday that it's crazy with boatfuls of crude oil filled up and the stockpiles everywhere of it. Why OPEC is pushing the price of oil up? It's crazy and it shouldn't happen. So be interesting to see whether it shouldn't happen and doesn't happen changes the course of oil price here. But it has put a spinning top in technically on the weekly, so we'll see what it gives us this week. It sold off a little bit on Thursday, Friday there, eased back a little bit, almost pivot swing. Just not really, it's very neutral today at the moment, not really going too far. Has got a weekly pivot below, but it starts breaking down a little bit more here. We'll just have to watch out what's said this week, as whether he tweets again or trumps again. We'll see. It might start bringing the price of oil down a little bit. If he's powerful enough to do that, it's quite a possibility. But certainly it was quite a harsh tweet on Friday. So watching that, the excitement of course is that oil is going to fly up to $100. It could still push up higher, but there are signs. Wasn't quite a divergence on this. Let's have a look on the. No, there's no real divergences kicking in here using either MACD or RSI there. Slightly higher on the RSI there on the second move. So not really giving me a divergence, but as I say, from a fundamental point of view with tweeting, we could see a change there. Okay, and then let's have a look at someone asked me about the S&Ps, so I will look at the S&Ps and let's have a look at where we're going with the S&Ps. We can also look at the sentiment, if I can dig it out for you on that as well. On the S&Ps, I don't have the, well, I could actually dig out the CME sentiment on oil, but let's have a look at the Globex mini futures here. S&P 500 weekly picture. Well, it's still in this wedge at the moment. I'm just going to draw the wedge on here if I can. Wedge is still wedging. So still in that wedge. Uncertainly, it's run up to its upper band there. It could be selling off some more here, testing that area. It was running in. It's okay Monday, Tuesday, and then we saw Wednesday pushing up there, putting in the shooting star. Thursday, Friday selling off. Today already we're seeing a bit of overrun from that. I had the trend line on there last week when I was looking at it. It's broken out on Thursday, it's closed below it Friday. Could well be pushing up. This is the tighter trend line on the dailies. It could be selling off some more yet. Let's have a look at the sentiment if I can dig it out quickly. Let's find it in the steady. So I want the equity exchanges here, and we're going for the S&P 500. Let's click on that and let's have a look at what the feeling is amongst the big boys. Woohoo! Let's start off with the dealer side of things just to see what's the net position is. Okay, it's still an air of bullishness out there surely, because they're still seeing more. They're having to take more short, or have been more on the short side here, so they're covering the other side of the trades. Let's see. Asset managers would tend to be more bullish anyway, generally with stocks, although they could start hedging. And just looking at the sell side of that, it could be a bit of hedging kicking in on some of those positions. Let's look at the hedge funds. Then they're taking more of a bullish stance here, net bullish I would suggest in their stance here. So edging more, slightly more bullish this week than last. Bearish rather, net bearish, with the longs reducing as opposed to the shorts increasing. So steady sort of sentiment there. Let's look at the non-reportables and see what the retail side did. Oh, they're getting all bullish. What a shock. Okay, the sell. So a much more bullish tone taken by the retail market there, maybe. But it does look technically short. and we could see a bit more rollover. We do have quite a lot of reporting going on at the moment, so that in turn could of course give some quite big volatility to the S&Ps. Okay, that's it for me. Gone on for a little bit longer, but a bit more analysis this week. Have a great week. Bye for now.